Okay, good morning and welcome to the Market Watch Group Weekly Market Prep. My name is Scott, for those of you who are new. Um, I mainly run the group and have the other traders assist. I would say that my primary is Glenn and Gary fills in as well. Eventually, we'll see all of the coaches pop in here or there to do some support, especially as the numbers grow. So I'm excited to have that group in a supporting position. Here are the disclaimers. Educational, illustrative purposes only. We're not brokers. We're not advisors. We don't give recommendation. We don't give guidance. Lastly, let's talk about our agenda. And those of you who are new, I want you to just find your comfort level at any point. Meaning, if you're ready to dive in and start asking questions and making comments, just definitely do it. If you want to spend a little time, just observe and start to get a sense of what we do and how we do it, great. If you have questions, type them in. People are going to respond to you quickly. Make sure that you're spending some time in Discord looking at the resources, looking at there's just different ways to utilize that. That's and those coming from coaching and those who have already been here, we tell you this a lot. Trading can be a lonely endeavor. It's hard to connect with people who are committed, who are educated, who are active, it's hard to find that. It's hard to find a good community where you're not feeling like someone's trying to sell you something. And when you find it, you want to contribute, you want to latch on. And so hopefully that's what you find in Discord is active traders who are working off of a strong trading education, strong background. They're working with a plan. They're working off record keeping. They're strong technicians. They tend to be options traders. If you find trading, it's even more rare to find them good with options, right? And so hopefully you find there's a lot of value in being able to participate in a community of like-minded traders that will be curated. Someone coming in trying to sell something will absolutely be admonished and yanked. Right. And so, yeah. Okay. All right. Let's talk about it. What are we doing today? Market posture. What's the market? Is it changed? Is it the same market? We have actually found a good level of stability. Why is it good? Because it's bullish stability, and that should be giving you confidence. Confidence to stay in trades if there's a hiccup. If you catch a signal and then it kind of stalls, there's no reason to panic. Don't panic. Relax. If it doesn't break support, and we'll show you a couple of those trades that happened. Oh, Sandy, sorry to hear about the frustration. Hopefully you can find a good signal. We're going to look at the posture. We're going to review what is coming. We've got nothing, bam, inflation data. So we're going to talk about that. Sector searching. I have identified for me, and you guys tell me if you think this is right or wrong, but I feel like financials, we have a couple of good ones, a few good ones, but I feel like if we did a search, financials would be beneficial because it seems like financials is trying to move into that third position from a sector rotation standpoint. Technology super strong, a little bit of a hiccup in chips, but software and communication services are all pushing steadily. Industrials, maybe. Consumer, Amazon's been strong. So the question is where do we start to find more consistent breadth? So, Mike, oh my goodness, did I not say hello? And Billy Ray, I saw. See, it's getting harder for me, guys. It's getting harder for me. I apologize. Trying to get in there. I love you all. I think I got everyone now. I need to read the comments more often. I'm going to be back and forth. Watch list maintenance. Eventually, though, I'm looking for the comments to be amongst yourselves, and I'm just kind of interacting fluidly amongst you. So some of them will just be missed, unfortunately, unless you reflag it. Watch list maintenance, early week shopping list. I gotta change that one. Early week opportunity list. And lastly, what are we working on this week? Risk management. And I know a few of you are cycling right now on your trading plan. So if you're cycling on your trading plan, I think the two of you who said we're working on risk management. So we're all together now working on risk management. And those coming from coaching, you'll find that we have a trading plan template that we use. And it's probably going to be very similar to what you use with your coach, if not exactly the same. Subtle differences, but it's going to be at its core the same basic structure. All right, let's dive in. Let's dive in. Performance. I just re-logged in. I don't want there to be performance problems. All right, we seem to be okay on my charts. And okay. This log, those of you who are new, you can download from our downloads channel. There are links in there for you to get resources and downloads. So anything you see me use, you will find there. Any of the analyses that I use, any of the websites that I use, it's all available if you want to replicate. It may be similar to what you've done. It may be slightly different. Like I said, you're going to find that you just look to acclimate at however you see fit. Okay, where are we? Well, let's start with what we've seen, right? We had the little hiccup and we dropped down a little bit and it just wasn't that bad. It wasn't that bad. I was a little concerned that we were going to see a correction, 10% coming into the summer, but we never dropped more than 5. And so you can see our posture never dropped even to neutral. It was slightly bullish at its worst. And then by early May, we had started to tick a little back up. By mid-May, we were soundly bullish again. So it's been two full months where our number has been back at a 5. Almost 2 full months. And we've been at a 5.5, 5.5, 5.75, 5.5, 5.75. We'll see what today is. Now we look at what the market's done since this May time. Right around here is when we kicked right back up into we had this consolidation. We had a little bit of a break. We had a higher low right here. Our posture improved here and continued to improve. And we've been bullish this whole time. I've had no concerns, and we've had 2 good bullish windows, plus little ones in between. So yeah, it should have been good bullish trading this last couple of months, and we should be expecting more. And we literally just got exactly what we tend to look for. We had a consolidation here, right? This is our selling cycle. There's the consolidation. Then we started to turn. Bam. Turning up. Candles breaking. Stochastics turning. We had a window open, so there should be trades on. And looking to carry those trades into next week. And I think we still have setups. Financials, despite the fact that the market was moving, financials is moving a little bit off cycle. We took profit earlier last week. Now financials are already in a consolidation. What's the problem? Earnings. Earnings is coming up. So and who opens the window in earnings season? Alcoa and financials. That's what's coming up here. And so I don't know. We may be limited in one of our improving sectors as we watch it improve, and who knows? Like if the corporate now we're adding corporate information, corporate data to our mix. Mostly we've been processing employment data and inflationary data, because that is what leads to Fed. That's the two things that the Fed is primarily looking at. Okay, we've broadly ignored other things. We don't really look at GDP too much. We don't look at real estate reports too much. We've tuned into what data is moving the market now, and that's something that you should be doing at any given time in any given market. Part of what we do. And now we're moving into the specifics of it. You know, where's the money flow and what does that mean, and et cetera, et cetera. Let's score it because the first two are going to be super easy to score, right? Let's go back to the numbers here. I'm starting at long-term trend. I'm a 1.5. I've been a 1.5. What would make me more than a 1.5 or less than 1.5? Well, obviously it would have to break out of whatever my current trend is. And here it is. Now, this here, you can see these lines show up. That's the short-term trend. That's not what we're scoring here, right? I am scoring this, the blue, this trend line and this trend line. Those have been intact. What does that mean? It means that we've been scoring it this way pretty much the whole time. Not the whole time, right? Because we used to have, it's really been since through this area here, I believe, is when we transitioned. That's when this prior score back here, we were scoring it around a 1. And now we're scoring it a 1.5. Right? Hopefully now you're really starting to see like, oh yeah, it's pretty clear. Right? It's like, oh, okay. It's clear. It's stable. The only time we had a little bit of real uncertainty, let me get one more color out here, is this. Right in there, we were close to starting to see things drop even more, right? Well, I don't know what the score was back there. We might have actually dropped down to like a 0.5 or I don't think it ever got negative. But anyways. And here we are now, 1.5. Has anything changed? No, we're right in the middle of that current trend. Unless I break above it over here or I break below it over here on one side of that trend or the other, that 1.5 is going to stay intact, which brings stability to our market posture score. Love it. Then what? Then we drop down to 6 months. Now, that's what was showing up as that tight little line on that chart. Now we're scoring this. And this has been the same for an extended period of time as well. So when we go back and we look at my market posture score, I'm a 1.75 and I've been a 1.75. Like, it's hard for me to illustrate how uncommon it is for us to have such stability in both of our trends. Right? It's really nice. And yet, what do you still hear when you go watch CNBC or Bloomberg or read something, right? We hear people always talking about something that, oh, the inflation is this, or this indicator did this, or blah, 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 indicator, this, that. And what's price doing the whole time? Is going higher and then higher and then higher. And so you'll hear the phrase, the market climbs the wall of worry. Yeah, someone's always planting a worry out there. Just in media, they're trying to be the one who says they flagged it first, or blah, right? And so, yeah, I don't know. I really tell people all the time, Bob, so good to see you. Glad you showed. Glad you can make it. I tell people all the time, I would really, really strongly consider the sources that you open into your purview, right? Like, who do you read? Like, and even when we look at Yahoo Finance, I tell people, read the headline. And if it looks like it's data oriented, Yeah, but if it's just some opinion piece, some writer who's like spewing out an opinion, like who is that person? What credibility should they have? Just that they're on Yahoo? No. Don't give them any credibility just because they're on Yahoo Finance. Yahoo Finance is putting new stuff up constantly. It's just a content machine, right? So be careful, be discriminate with what information you're looking to incorporate. Trend looks great. Now, remember, one of the things we've said is as the trend maintains strength, the expectation is that the volume oftentimes will surge on the transitions. Right now, if the volume started to surge, I would actually probably be more concerned that it was negative than positive. We're going to evaluate it either way. So if it surges and it's positive, great, then we score it positively. But once the trend is established, you don't need volume. We need volume. We need breakout volume at transitions when the buyers are trying to smash and grab, right? When they're trying to gain control, they have to hit it and hit it and hit it. And they have to keep overwhelming the sellers who are like, I don't know, we're not convinced. But when there's no sellers at all, we don't need buyers to have breakout volume. And that's where we find ourselves, right? So we don't want to have any kind of like a dogmatic approach to anything in our technical analysis. We have to be fluid and make sure that we're applying it at the right time. So people are like, I need volume. No, you don't always need volume. That's just simply not true. But let's go look at volume. Let's go look at it and score it, shall we? Those who are new, everything that I'm doing, all of these components, long-term, 2 points, short-term, 3 points, volume 1, major market 1, and you're going to see we use different charts for these two. There's a video, it's about 15 minutes long for each one of these that just teaches you how to do it, what the scoring is. So there's different resources available that are specific to the group. So a lot of the trading stuff we're doing is going to be very familiar to you. But some of the nuances that we do in the group, like this specific market posture process, this might be a little new to you. You may or may not have like a weekly market assessment routine, or it may be a little different. So there are plenty of resources to kind of help. And if you ask questions, a lot of folks have been here a long time and are very comfortable, will assist as well. Let's do then volume. We've been at 1/4 of a point. So the buyers have actually maintained a pretty good hold. So we have a volume day here, red candle, but price advanced, right? That's a jump up. So that is a positive day. And then we have a positive day here, and whoops, clearly a buyer's day. So we're going to give a check mark there. Then we have 2 in a row that. Now, I've been giving them this, but I felt like it was generous. I gave it to them because it was an engulfing. I gave it to the sellers. So I said, okay, sellers can have that one. And it did drop again. You'll notice, though, that the advances, we went from here to here. That's a good advance. We only dropped half of that and half of that. But I'm going to give it to him just, I don't know. Maybe I should combine this into like 1x as I think about it. I think that's probably more, right? I think that's probably more realistic. Because from here to here, that is about the equivalent as one of these. I'm going to do that. You guys only get 1 for that. But you also get 1 for this. Boom. And changing the rules. Not changing the rules. I'm adapting. Be water, my friend. Be water. Remember that the objective is to be representative of buyers and sellers. And so by me saying this day here and this day here are both twice as big as this day here and this day here means I should combine these two so that this and this, these three are all now the same, right? If you look at the actual price action that occurred during the increased volume, those three are now the same. So I think that's more representative of what happened. And that's my objective. It's not to just score it. Doesn't it come out with the same results? Actually, I think it would change the score. Let me show you why. So then I have one here, and now I have 2 buying days and 2 selling days, which is a tie. And a tie goes to the buyers. So that gives me not a plus. This is maybe where I confuse. I'm saying a positive. This gives me a score, Stephen. I think I caught myself. That's maybe where I confused you, right? Is I put a plus, but I meant a positive. So sorry about that. That's on me. That's a 0.25. A tie score is a 0.25. If I gave this 2 scores, X and X, then it would be 3 selling days and 2 buying days, and that would actually be a 0. So for me, that's the difference. That's the difference. Now let's give it a sanity check. We started here, we ended here, and ultimately this period of time had a positive slope. So I would say that a 0.25 is more appropriate to score that than a 0. So I would say that the 0.25 holds. So if we're doing price, we're not doing price. We're not. Do you see what you just did? You just said we're doing price action. We're not doing price action. We just did a sanity check. That's not doing price action. That's doing a sanity check using price action. The verbiage is important. We're doing volume analysis. And after we're done with the volume analysis and we have a score, 2.25, now I'm doing a sanity check. And that sanity check is this. If somebody said, my score is minus 0.25, and they had a positive slope on their sanity check, which is just simply a 22-day, where did we start, where did we end, and is it higher or lower? I'd be like, you should nullify your negative score. If you have a negative score and then you have a positive sanity check, you should take your score to 0 and just nullify it. That's what I think. If you feel really, really strongly that you need a negative, that you need to say, oh, the sellers are clearly in control here, because that's what you're doing when you score it negatively, right? Is you're saying when there was increased emotion, there were more sellers than buyers. And we're not saying that, right? We're saying we think there's more buyers than sellers. We could have a positive slope with a negative score. I don't think you should. I think you should go back to those where you've seen it and look and see, like, would I have been better off if I had just gone 0 when there was a positive slope? Because I actually think that your scoring would have been behind. I think that it slowed it, if that makes sense. Yeah. We really don't want to say that we see sellers. We don't want to see that we see sellers with more conviction as price advances. That's a bit of an oxymoron to some extent. I mean, maybe there could be a situation where it could be like just ever so slightly, but I don't know. Okay. Boom. Let's move forward. So where am I? Still a 0.25. Nothing's changed. Major market. Okay. What are we looking at? Whoops. Let me move this out of the way. What are we looking at in regards to major market? We are looking at the race for third. Right? What does that mean? It means that technology is firmly in a leading position. There's no way I don't score that bullishly when I see the NASDAQ showing what it did here. And it's the same way I described it all through back here as well. And if you go backwards into 2023, you would see during the bullish times the same thing. When we have technology in a leading position, which is exactly what we have now, we are going to assess that bullishly. I am not going to be thinking, oh, should I call the tops? No, you shouldn't. You should trade bullishly. That's what the herd is doing. That's what we're doing. So then we look who's in second, the S&P. Nice, solid representation. And then what? Then we have the race for third. And in that race for third, what are we evaluating? We're evaluating the defensiveness of the Dow versus the bullishness of small caps as appetite for risk. If I'm an individual investor and I'm feeling more bullish on the market, I am not going to go look through the Dow. I'm going to look through small caps and find something that could grow 30% in a year. But if I'm a little bit more cautious, I'm not going to go jumping into the small caps who have just been yanked all over the place. Although right now, if you look at blue and green, there's more volatility in the blue, right? Like you can see times like this, the Dow is just like steady Eddie and the Russell's like, all over the place, right? Yes. Let me see. Let's move it. We started at 200 days. That's 9 months. Now we're going to 133 days. The link for these charts, both our sector rotation and our major market, these links are available in our resources channel. Those of you who are new are thinking, hey, I'd like to play with this. These relative strength that allow you to just kind of like evaluate. You could do something like this with like the top 3 stocks in a sector to really be like, who's really leading this thing from an investment standpoint, right? Things like that. Really, really cool analysis. Helpful. What do we have here? We have exactly the same thing. NASDAQ on top, S&P in second, and then there's the race for third. You can see more volatility from the Russell, but they're really basically in the same place. The Dow is slightly ahead. And so when people are like, well, you said that if the Dow's ahead, you're going to score it. I'm not going to go Dow's ahead, now I'm negative. Russell's ahead, now I'm positive. I'm going to wait until something is clearly in a leading position. And when I look at that, I don't think that with the Dow 1% ahead, it's in a clearly leading position, right? I mean, they look like they're basically in a tie, and one just took a little bit of a surge. Now we go to 66 days. Do we say someone's leading, or do we say, yeah, that's a tie still? That's a tie. What is clear is that the NASDAQ is leading, which is bullish. That's clear. We love that. That orients us already. Those who are new, our focus has been tech, Microsoft, Apple, and tech auxiliary, which is communication services. Now you have Google and Meta and Netflix, and chips have been a highlight. And so those have stalled a little, but that's where we've been trading. That's where the money flow has been, clearly, right? Do we expect it to continue? As of now, yes. If someone can show me something, right? Not think, not feel, not believe. What do you see? You have to show me something that says, look, money is flowing out of technology. It's not. It just flowed in. Looks like it's pausing. Looks fantastic, right? But as far as scoring third place, we have no new information. That means I agree, Stephen, it's a tie. I'm going to leave my score exactly where it is, 0.5. That's bullish. What would it take to get to 0.75? I need to be convinced that the small caps have moved into that third position, leaving the Dow lagging. That means that the Dow, with its defensiveness lagging, there is no defensiveness. Well, we're not there yet. That's what would raise the score. Okay. What would take it to a 1? It would have to be the Russell leading the S&P, right? Then all systems are a go. Yes, that's a great call out. The small caps have been somewhat inhibited by interest rate speculation. It's getting hard for them in this prolonged extended rate above. I mean, what's our Fed rate? 5.5, I believe, is what 5.25. Anyways, every time it looks like the Fed's going to cut, people start thinking small caps, because that's a more bullish environment. Remember, we said don't fight the Fed. When the Fed starts cutting, that's going to increase money flow into the S&P. That is going to push us into that more what they call dovish or more accommodative market. When the Fed is accommodating, that's where that saying comes from. Don't fight the Fed. And then subsequently, if we hit an environment where the Fed starts raising rates, which is what we saw way back prior to 2022's bear market, yes, don't fight the Fed. We obviously pay a lot of attention to the Fed, more so than many other things. So major market, I'm going to say 0.5, but I am going to take a little peek ahead. Now, if I got to this point on the 66 day and I'm like, I'm not sure, I might be a 0 or I might be a 0.25. If I was on the fence, I might be a 0.5, I might be a 0.75. I'm going to go to the 22 day and I'm going to say, now what? But even on the 22 day, it's exactly the same. NASDAQ ahead, S&P in second, these two battling for third. Right now, the Russell's a titch behind, but I don't see enough that I put the Dow. Now, if I see the Dow surge and the small caps drop, I will drop 1/4 of a point, and that will slow my market posture down. This is us just keeping real-time tabs on market conditions so that we're ready to go as we recognize they're changing. Okay, so that score unchanged. Sector rotation. Now with sector rotation, two things are happening here. I'm going to score it. I'm going to use how the institutions are moving money to help me understand market conditions better. But this also informs our watch list and our opportunity list. Right? Our opportunity list is going to be heavy on the sectors that we have identified as the leading sectors. So that's an important part of understanding this. So some of these things, the VIX, we're going to score it to understand the market, but it's also going to inform us as options traders as to what strategies make more sense. Are we in a low implied volatility environment? Options are cheap. I'm probably going to buy options, right? I'm going to take some swings. I can get 4 or 5 to 1 reward to risk out of a 3 to 1 with a cheap option. So yeah, I want to know that it's that time and I should try that. Or are we recognizing that options are expensive, implied volatility is high, and we should be more protective in how we inherently build our trades and we start doing more spread trades? Should we recognize that implied volatility is low and this is a great environment for calendar spreads? If you've seen the alerts, our calendar spreads, I should go look. I believe we're 100% and that the average rate of return is around 40 or 50%. Calendar spreads, and why? Not because we're so great at calendar spreads, but because we recognize that the conditions are great for calendar spreads. That's a very different thing, right? So, those of you who are new, we have a little quote that we like here in this group. Says that the blade of grass who doesn't bow before the lawnmower gets his head cut off. So this is the lawnmower analysis right here. And we are a Blades of Grass club. So here we are. Major market, 0.5. Let's go to sector rotation, and then we'll do the VIX, and then we'll look at our watch list, and we'll see where that puts us. Sector rotation, where's the money flow? Number one, this is on 200 days, and we're going to look at it, and then we're going to zoom in, and then we're going to zoom in. Right? So frustrated. I'm sorry to hear it, Sandy. The recording will be posted shortly so that you will be able to go take a listen. I mean, I'm not saying we solved the market today, but we did get one step closer. Technology up, strong. Communication services in second position. Looks great. That's just, I see that and I'm bullish. I'm like, yep, that's bullish. I like that. Who's in third? Financials. And we said we saw some signs that looked like financials could be trying to pop. The only problem is we're now getting up into the earnings season, particularly for financials. Who's here? Industrials. Well, that's the usual suspects right there for growth. Who's missing? Consumer. Where are they? Consumer discretionary, particularly. Well, they're down here, but look at that. They're, we're measuring where they are, but it's not like we're not able to see that while some things have been sort of sideways or dropping, consumer discretionary has actually advanced, and that we're likely to see more of that show up as we zoom in on these time frames. But what kind of a starting point do I have? Bullish, right? Now we drop to 133. Now what? Who's on top? Hey, I'd love to see a little battle between first and second, a little Talladega Nights battle for first and second up top. Communication services and technology going back and forth. A lot of strength there. Where did we have alerts recently? We had an alert on Apple. We had an alert on Google. We had an alert on, a trade built on AVGO. We had follow the money is the idea here. Then we have, this is where we get a little concerned. Who's in second? Who's in third? This is where I said it does feel narrow. I've had times last year, there were times where we would talk about people say that there's only 7 stocks and this and that. I'm like, that's nonsense. I'm not oblivious to that analysis. I'm saying at that time, it wasn't narrow. It was broad. And I believe that my position was borne out by the bullishness the market produced. Right now, I do have a little concern because we have financials right there trying to pop in, but we need more for this thing to continue and to move into a strong bullish fall Santa rally, which I feel like with the Fed, with things going on, that's lining up, and that's great trading. And if it does that, we want to be ready to hit it. Right? I want to hit it. If you're at the table and you recognize that you're in position, you have a lot of chips and you're playing with a lot of weak players, you're going to play the hell out of that table, right? You're going to push. Let's go. Versus if you find yourself at a table with a bunch of sharks and you've got not very many chips, you're going to be very, very reluctant, very cautious. Which market are we in? It's important to know context and adapt and push or pull back the reins as necessary. Our risk should expand and contract with the favorability of market conditions. Yeah. So it is a little narrow, but we've got a couple of things. We've got financials starting to pop in, and we've got here you can see that same thing. These guys were at the bottom, and they're like, we're trying. They're trying, but it's going to take a little time to establish that a little bit more. And now let's go to the 66 days. Little bit more skill-wampus here, but I want you to notice that on 66 days, a couple of things had happened. Number one, we had energy way up here that was just camped out. No, that's utilities. Sorry, utilities. Utilities, which is defensive, was camped out. But we had obviously recognized that since this position, it had been on the decline, and now you can see it even more so. Even more so. So you can see here we have technology by itself up top. We have communication services joining it. And then look at what we have. We have staples, and I've actually been combining. I like Costco and Walmart right now. And I think they're actually more bullish than they are given credit for. And then we have discretionary here. So on the other charts, we saw financials. And look at that. We have financials here. So now we have financials pushing. We have discretionary making a big push. Ooh. It's not quite enough yet. But I believe that my increase from 0.25 to 0.5 was warranted. And it's going to maintain. But it's not quite enough to bump it to a 0.75. I would need discretion. I would need communication services a little higher. I would need one more of these a little higher. And I would need financials. Financials are right here. Right? They're right there. So I'm fine with that. I'm fine with that. They're moving. What do I have at the bottom? Materials at the bottom. Industrials. Energy. You can see healthcare's moving down. You can see utilities moving down. This is aligned. I think we got a real good read on the bullish transition back here. I think we had a good read on what was happening. And I would say we've got a good read on it now. I need a little bit more before I kick that up to a 0.75. But I would say that I'm closer to these two moving up than down. Right? Up then down. Right? Again, Stephen, yes, you're right that the utilities are in the 66, but you can't just blindly say they're in there without acknowledging that they have dropped significantly, right? That it doesn't make sense for us to give them credit for being in the list if they're on a significant downward. Don't be dogmatic with the fact that something's there. Make sure you're open to what does it mean? What are the implications? Right? So financials is pushing. I'm looking for, what does this tell me about money flow? Is it flowing the right way in a bullish fashion? Or is it flowing in a defensive way? And I want to make sure that I see what I need to see to score that. I think that our score is perfect. And like I said, I'm closer to a 6.25 than I am a 5.25 based on these two contributions right here. Lastly, let's go to the VIX. Let's go to the VIX. Let me get back to 6 months. Let me get in here. Whoops. Yeah. I feel strong. I feel like the conditions, we need to see them as strong because there's enough out there. Now, does that mean there's no concerns? I told you on Friday, this is absolutely valid for someone to say, hey, Scott, I picked up a hedge. Great. Anytime you pick up a cheap hedge, we're at a 12.5. Anything sub 14 for me is cheap for a hedge. 12.5 is great. So if you're carrying bullishness and you said, I'm just a little cautious, I'd be like, great. Carry a hedge for a few days. If nothing happens, drop the hedge. Minimal amounts of time decay on that hedge because you got it cheap. And then you can unencumber and ready to go if you feel like the market starts moving again. And if the market starts to, I definitely have this concern in the back of my mind that this could pop up. Would that be catastrophic? No. You would be able to get out of that, wind down, close your trades. You would give back more than you wanted to. We always give back more than we wanted to, but would it be catastrophic? No. Would it be nice if that started happening, especially if it started happening right on Monday morning, to have a put that's starting to make some money that gives you a little bit more leeway to go clean up the rest of your trades? Yes. So what I said was I have an automatic hedge signal that generates when the VIX makes a higher low. So for example, we had a low here, and then it went up, and then it made a higher low right there. On that day, this was confirmed to be a higher low. That would be a hedge, and that was a great one to put on. They don't always work like that. Good to see you, Michael. Right? But anytime I get something where it looks like there is a higher low, that to me is an early sign of escalation. I don't have that, but I do have something that looks like, hey, you know what? If you're a little bit cautious and you wanted to put a hedge on, great, understandable. That's it. Now, how do we score this? Our last points of highs and lows for scoring. We had one here. That was a high. We had one here. That was a high. And we scored that as a lower high. We had a low here. And we actually had a prior low here. And that was a higher low. So we had scored both of those things. I want you to notice that to some extent, this thing is a little bit of a coil. There's a small measure of uncertainty here. But overall, it's low, which is bullish, and more than not has stayed low. So that is where our bullish score comes from. I am bullish on the VIX. It's a 12.5. Anyone who doesn't understand that 12.5 is pretty bullish doesn't get it yet. But is there a need to change my score? No. If we move out of this triangle to the upside and it starts to escalate, my score will start to drop. If it moves out of the triangle to the downside and shows ongoing increased strength, I'll get to a 1.5. David, it's great to have you. I hope this was helpful. I hope you see what we're doing with this. If you missed this, make sure you come. I'm going to rattle through our watch list now. But go into the group and find the watch list. Our watch list is chock full of high liquidity leaders from the sectors that we watch. So let's pop in there and start finding. So what are we now on the market? Real quickly to wrap it up. I'm a 575. This is a stable, bullish market. We should be trading it as such. What is my philosophy? Find a bull market, buy the dips. So what are we going to do? Exactly that. Oh, the Apple trade just kept going. Our Apple trade continues. The alert came when? After the pullback. That's when the alert came. It had a little bit of a shakeup, a hiccup. What did we say about hiccups? We have to be able to withstand hiccups. We withstand them because we're bullish, right? We have to withstand them. We talked about what it would have taken to close this trade on a real-time basis the next day. We said if it comes down here, then yes, then we start thinking that's more than a hiccup. Although, to be honest, you might even give it all the way back, but maybe not after it already started to move. That's more of a judgment call. But now that we stuck with it, there it is. Looks fantastic. Looks fantastic. AMD. I don't know. I'm close. I think maybe it's done enough now that if it pulls back and makes a higher low, I would start to consider this one. But I'm not looking to trade into it at this point. We have other things that are in place. Interesting, this one worked while other ones didn't, though. Amazon is great, but for me, it's overextended at this high. I have to be patient and wait for the next move, right? I'm not trying to get into these things after the 7 days are up. At this point, this is moved. You're managing if you're in it. If you're not in it, you're waiting. Be patient. No need to chase trades in this market. Here's a frustrating one for me. Well, not really. That's not true. It got up. We had we built this trade live in a foundations session. We placed the trade. It triggered here. Then it got up to the first target and it took profit on the first target. Now at this point, I'd be moving the stop up. The second target's up here. We had a dark, not even a dark cloud cover. A dark cloud cover has to go halfway down and it didn't quite. But certainly there was a little bit of cause for concern, but stayed with it. If I look at the Heiken Ashi candle here, everything looks fine. I can tighten my stop, and my stop is at profit now. And on Monday, I will tighten it again, and I will tighten it to more profit. So at this point, we're hoping that this thing breaks to the next level. But if it doesn't, our stop is now moving up closer and closer and closer to keep as much as possible. And that will be a profitable trade. Great. That's good trade management. Hopefully, I think you would see it that way. What will happen when AVGO splits? Everybody, if you're in shares, you have 10 more than you had at 10th the price, and all of your orders are adjusted to a 10th of the price. So everything is automated as well. Yeah. But I think we'll be out of the trade before it gets there, and then we'll see what happens after it, because we're seeing some good post-split activity on things. Okay, let's keep going. AXP, we said financials, and the financials have started to move, except they only made a little bit and now a pause. So I think we're going to have the ability to find entries on these pause. Little bull flags coming our way. Boeing is in a little bit of a maybe position. If we can find a bounce on top of that 50, that's a maybe. I'm looking for for industrials. You can see there's the flag pattern on Bank of America starting to pull back. I will trade out of these pullbacks. Bank of America is one of my favorite. Citigroup is one of my favorite. Caterpillar's kind of flat. Nothing there yet. Colgate-Palmolive. Alert on Friday. We actually talked about it on Thursday night. We talked about it on Friday. Alert on Friday. This thing is ready to go. You can see we got the same signal here that we got back here. That one worked great. I'll tell you this. Because I caught this one early, I actually got impatient, and then I missed the next trade. So I'm going to be a little more patient on this. I like to be honest. Look, I made a little bit here, and then I watched it make a big move, and I didn't like it. And I thought, I think I should have been more patient with at least half of my position. But I had a decent gain, and it was stalled for 5 days. 5 days, you guys. Give me a break. CMG was designated a consolidation. It has to break out of this. Then it has to pull back and make a higher low, hopefully above the 50. If that happens, I love it. I want to trade this thing post-split, and I think it's going to go for another run. So let's be ready. Oil, there's nothing there still. Costco, patience paid off. Patience paid off on Costco. We put the alert out here, then it paused. We stayed diligent to the trade, and our diligence paid off. Diligence and patience with Apple and with Costco. Those are both working fantastically now. Love it. The Dow kind of sideways. A little bit of momentum in materials, copper and gold. Negative momentum in the crypto markets. And if it's negative in Bitcoin, it's negative everywhere in crypto markets. Don't kid yourselves about trying to pick something out. GE is very sideways. I get it. Gold breaking out. Google ongoing. You might have taken some profits here. You might have stayed with it here. It's continuing to advance. Very strong. Definitely a market leader. I want to trade it again when I can. But for now, it's just manage what you have. IWM, like the Dow, there's some iffiness. We need to see who's going to break out. Speaking of consolidations, there's one right there. If we bust it, if I see that happen, I'm probably going to start scoring the market a little stronger. That's what we need to see from small caps. And they won't do that until they're convinced the Fed is going to give them a cut. Nothing for home builders. Yes, we said that consumer defensives, Colgate-Palmolive is the one we got the alert on, but you also could have taken Coca-Cola. Meta, it was here or not at all. We talked about it. We didn't do an alert, but we said it's there or not at all for both them and Google. You can't wait. when you get your signal, you take your signal. It crosses. You want to be in if you at least on that second day, and then or have an automated order. Otherwise, you're going to be here at the end and you're going to be like, yeah, I missed it. And you're right. You missed it. MFC, financials, pulling back. I like Citi and Bank of America better. You could think about a trade on MMM. It's just not moving as quickly as the other ones are. I like Morgan as well for financials. Microsoft, I've been waiting for a trade. I thought I was going to get one out of this, and it just only gave 1 day consolidation. So missed the train. It didn't slow down enough. Micron took it. I think chips are strong enough that I held on to this one. Got the signal here. We got the signal here. Good day. Second day paused. I'm not going to let it break the 50, but I'm going to give it to see if this thing if we can harami. Same kind of a thing. If I can open inside of here and hold and then break out, then my hold made sense. And then I'm going to manage the trade at that point. So important day tomorrow for Micron. We'll see what happens. And we'll definitely talk about it as a group. Netflix is good. It's viable. It had a trade. Nvidia's on a little bit of a pause. Palantir. Palantir's looking good, but the signal is back here. In this area. The Qs look amazing. The SPY also looks amazing. If you don't like this market, I don't know what market you'll like. TSM looks great. What are we seeing from the dollar? Progress, right? We said first and foremost, back below 29. Okay. We were a little concerned here. The longer or the more this thing did, if it does this, we're in trouble. We're not out of the woods yet. It still could move into something. If it bounces, we're in trouble. What would I want to see? Now that we've gotten back below 29, I'd like to see it back below this level. And if we can get under the 50, that's excellent. That's fantastic. So, yeah, the strength of the dollar certainly is weighing on what the market does next. The VIX looks good, but, be mindful of escalation. Walmart, we were talking about if you weren't in Costco, that was viable right there. But you didn't have much time. There's your selling cycle from here to here. That's your selling cycle. You can see that this 7-3 stochastics does a great job of representing that and then giving us a turn. But we need to catch it. If you didn't catch it before 68.5, you're too late. For me, you're too late. I don't want to chase it. Okay. That's the watch list. Looks good. We have plenty of things that look strong. Where are the new signals? I would say you're most likely managing trades still in in technology and communication services. The new trades are setting up. I would say the new trades just signals in consumer defensive particularly, and we have trades setting up in financials. So we do have consumer defensive and financials that are off cycle with technology and technology adjacent communication services. Great. That's plenty of opportunity for us. We should be expecting opportunities this week. Closing, managing, starting, it's ongoing. This is what it should feel like. This is what the continuity of it should feel like. So what are we going to do? We'll meet tomorrow morning, 15 minutes before we'll meet. We'll have our standard meeting tomorrow and be off and running again. Real quickly, I know I'm a little over time. This week's trading plan section, we are on section 4, risk management. Section 4, risk management. You can download a copy of this in the resources, in the downloads channel on Discord. Just grab a copy, bam. I'm going to be uploading some more resources in various places. Steven has a 3-exit spreadsheet, and he has a more automatic market posture template that I'm going to upload. Steven will be glad to know. I'm going to upload a sample template or a sample trading plan where I have fully filled it out so you can see what that looks like and have a little more guidance along those lines. I'm going to upload a trade log that has been filled out. So you can kind of see, along with some assessments, right? I'm going to put together, how would I assess this? What would I take away from it? Things like that. So those are what's going to be upcoming into our resources. For now, what are we thinking about? What's your portfolio heat? Most amount of risk you have at any given time. Trade risk. How much trade do you have at risk on any trade at any given time? What's the most number of trades you have on at any given time? How do you make adjustments to your risk in your trades? How do you correlate your risk management, your portfolio heat, to your current market posture? How are you finding tsunami indicators, things that say, hey, something's going crazy, be ready, and how are you subsequently hedging? More broadly, how are you determining when you should take a break from trading, whether you have a drawdown percentage, a number of losing trades in a row, or you just simply psychologically are not in a good place? Number 3 is the one for me that happens most of the time. This is how we manage risk. Is that comprehensive? No. That's starting. That's the bare minimum. If you start adding more to your risk management plan, good on you. I love it. This is just to make sure you have everything considered. So I want to make sure that that's in place. Okay. Questions, comments, or concerns? Let me know. I love that people are talking about their successful trades. I love that. I also hope you're gonna talk about your losing trades. This is a safe space, right? I always tell people I recognize a good trader by their willingness to discuss their losing trades. I love that we share. I'm not saying that I want you to share the wins, because it's contagious. But I also want us to share, hey, I took a loss. I was willing to lose 500. I only lost 2. That's a victory, right? When you keep losses, at 40% of what you were willing to or less, when you really start to gain that sense that your skill, it's a skill, your skill at taking losses is improving, that's when this group has achieved its next level up. We're leveled up. When we share those and we talk about how we do better at losing, it's almost taboo for traders to talk about that, which I think is insane. Right? Like, that's exactly what we should be talking about. You want to be a better trader? Get better at losing. First and foremost. That's where we have the most amount of control, is our losing trades. That's where we have the most amount of we can't just decide to be right more often. It takes time and work. We can't just decide to make more money when we're right, but we can definitely decide to take losses. That's a decision, man. And so that's a big one. Anyways, I love it. It's phenomenal energy. I love the energy the new guys brought. Keep coming. Let me know what we can do to make this this group is just like how we trade. We be water. We adapt. We improve constantly. That's all we try to do, is get better all the time. So if you see something we can do to get better, you go to the suggestion box. It's a new channel. And you say, hey, it'd be great if you did this. Yeah, I love it. Throw some spaghetti at the wall. We'll see if we can make it happen. Other than that, keep an eye out for alerts this week. Back to the grind. Business as usual. Have a great rest of your Sunday. And as always, happy trading.